Hey traders, Raghee here. Welcome to Charts and Coffee for Monday, October 4. Great to see everybody. Hope everyone had a great weekend. Good football game yesterday. Definitely, regardless of whether you were a Pats fan or a Bucks fan, yeah, definitely a good game. All right, so hope everyone took a break from the charts, but brand new week, brand new month, time to get back at it. And I was just watching the last episode of Billions. I'm at the very end of it. I don't know how it ends. I won't do any spoilers for those of you that are watching, but looking forward to seeing how that one ends. And so let's get to the question, shall we? As always, a couple of things to remind everybody. Make sure you are checking out let's see, do I have the, where is my Forex Factory calendar? But yeah, just make sure you're making a pit stop at the Forex Factory calendar. Oh, I have it on the other screen here. And take a look at what we have coming up this week. Just when we thought we were going to be done with just the constant FOMC we have, let's see, I do want to pull that up. Let's do that right now. Because I was looking at this last night, right before Billions started, and I was looking at it Friday with you all and said, wait a minute, this market still has a lot to deal with. And I don't mean just the different news factors. I'm just talking economic data releases that if you're a day trader, if you're looking for opportunity on end of day charts, you need to be ready. Definitely crude oil, OPEC starts today. And then if you've been playing Australian dollar or the Australian ETF, we've got the RBA tonight. And then we have ISM tomorrow. And then come Wednesday, we get the ADP and we start to see more FOMC speak as we kind of progress through the week. And it might be, snuck in there with, quarrels at 1:15 on a Tuesday. Remember, we have a bank holiday in China today. And then you roll out to Wednesday. And again, it's kind of sneaky, but you'll see Williams at 8:40 a.m., kind of an unusual time. And then later on, we have, again, that's the day we have our data point that leads into, of course, non-farm payroll on Friday. And if there is a fifth pillar right now to our macroeconomic rate of change, it is definitely, what does a jobs picture suggest that the message for the FOMC can be? Now, if you've been following the way we've been breaking down the market, as the market's been breaking down, this is not a downtrend yet on the S&P and the NASDAQ, and this is something I talked about, and I'm going to dive into more on Wednesday. So if you haven't yet registered, I'm sure I have the link here somewhere. There it is. If you haven't yet registered for the webinar on Wednesday, you can do so at simpletrading.com/trend. And what do we have right now? We have a market that's in distribution. It's markedly different, of course, than an uptrend, but it's also the kind of market that can be an account killer unless you can adapt to the chop that we're seeing. So let's keep that in mind as we manage the week. And the first question of our Charts and Coffee is, Antonio's asking about APA. Sure. So APA, it's flirting with organizing into an uptrend. You can see that with the candles. You can see that with the market structure. Where's my handy dandy drawing tool? All right, here we go. So you can see that with the candles. You can see that with the structure. We're above the mean on the V-score. I mean, everything's looking like what I would want to see as a precursor to a better, higher quality uptrend. I can't say that I love it yet, but all the telltales are there. Propulsion dots, the green grab. So I would say, yeah, you can start aggressively thinking about pullback buys on this one. Antonio, just make sure you know where this is in terms of where APA is in the passive investing universe. In other words, if I go look at APA and I kind of work backwards, I would say keep an eye on, I'd say keep an eye on FRAC for you Battlestar Galactica fans. Not, it is unconventional. Now, I'm not making this up. It's the unconventional oil and gas ETF. How can you not love that? Keep an eye on FRAC. Keep an eye on the names that are in FRAC. And APA as a part of that would be one to watch. All right. So, and by the way, APA is not one of the heavier weighted stocks. It's only about 3% within FRAC. So thank you for the question. Desert Dog, what do I think of AMLP? All right. So, I mean, once we start talking about MLPs, in terms of why AMLP, right? Why not just some of the other MLPs that are out there in terms of holdings? This puts us right into, I'll tell you what, PAA and WES would be two names that I'd keep an eye on for AMLP, because this is chop and it's not exactly buyable chop. I think this is a 1, 2, 3. Desert Dog. This is actually a 1, 2, 3. Maybe not ideal on the time that it took to the break, but I'd say this is a potential reversal. I mean, we've got the right structure. So I like the 1, 2, 3 on this. And then you really need on AMLP, you need PAA, Plains All American, to play along. You need ideally a 1, 2, 3 there. And then you also want Western Midstream to play along. I'd say Western Midstream's well on its way. So I'd say of these two stocks, both of which together are about 21% of AMLP, yeah, you definitely want to probably focus on WES, but PAA and WES have got to be a part of AMLP continuing higher. So good eye for keeping an eye on those components, especially in an ETF that's high concentration weighted. Now, if you haven't thought about what high concentration weighting means to the stocks individually that you're trading and the way that ETFs are impacting them, never before have we seen more influence from the ETFs. So it's not like I woke up one morning and said, I love ETFs. This is the way that I want to trade. It wasn't ever, it's not like my favorite ice cream, right? What it is understanding the nature of the structure of the markets now. It's understanding why these things are literally consuming consumer behavior, flows, influence, because of the high concentration weighting in many ways. And then once you understand, oh, this is what's going to help me decode the market, you're probably going to be as in love with ETFs as I am. You don't always have to trade them, but in the example that we just had with Desert Dog, you see how it works both ways. So when I talk about ETFs, I know some part of our brain might go, click, that's an investing tool. Not really. I think a lot of traders who understand that, yeah, my portfolio might be full of different kinds of ETFs. They're very effective ways to get granular about your portfolio and your investing rather than going into a broad index. I've been doing a lot more of that. And I mean, you have commodities, currencies, other countries. So the access to markets is far better because you've got so much more choice and growing liquidity. But I think a lot of traders who trade stock think, well, that's not what I do, but it's influencing your trade. So that's definitely something that I've noticed has continued, not just peaked, it's continued to have greater and greater influence. Next question is MRVL. All right, so let's jump into that. This one we do have exposure to, this MRVL. Pretty? No, but pretty sometimes is comparing to other names in this group that might actually look like dumpster fires. So when I look at MRVL and I'm thinking about, okay, let's keep this ETF thing you've got going here, Rog, for a second. I'll buy in for the 20 minutes of charts and coffee. Tell me why this is important. So think about MRVL and think about its weighting in, say, stocks, which I don't trade, but it gives you a group to think about, what looks good within the iShares semiconductor ETF. Is MRVL the best amongst Intel, AVGO, NVIDIA, TXN? A lot of the same ETFs, a lot of the same stocks that are in the SMH, which does not stand for shaking my head, although lately it feels that way when we look at semis. But the relative outperformance in MRVL is actually pretty admirable. It's one of the better looking names, and you won't know that unless you're looking at the groups. So I'm still in this one, and I would say as long as you can build a position, well, frankly, the trend following, which is barely valid, I mean, barely anymore, is probably 60. When you get down to oversold levels, you're probably looking at, say, 57.10 to 57.20. So thanks for the question. All right, next up is I'm averaging into AMLP. All right, cool. Baba, sure. I'll tell you this. If I'm going to look at names like Baba, okay, so one of the things that's really important for us as traders is to not master indicators or even time frames or intervals, but rather duration. What does that actually mean? Not the duration of the candles necessarily that we're looking at, 2 minute, 5 minute. I'm going to be day trading in the futures room in about 7-8 minutes. What I'm talking about is the duration in terms of what we anticipate the whole time to be, what we'll tolerate in many ways the whole time to be. So if I'm going to look at something like Baba, I've got to be fair about what Baba is going to present. In other words, if I take a look at Baba's exposure in the eWeb, if I take a look at Baba's exposure in, what else can I look at here in terms of Baba's exposure? Yeah, eWeb's probably a pretty good place to start. You'll see, and I mean, if you look at eWeb, KWeb, MCHI, FXI, all those names that Baba is either going to be a part of or influenced by, the first thing we want to remember is these are double red downtrends that have been in place since July. That's number one. Number two, they're not showing any signs of letting up. I mean, when I talk about signs of letting up, grab candles, nope. JT multi, nope. Below the mean, right? I mean, everything about this just screams short me or stay away if you're a bull. So you need a pattern. I'll look for a 1, 2, 3 or something. Well, let's talk about the other thing you can do. The other alternative is change the duration. And part of changing duration is, of course, changing interval, changing the time frame. But if you've got a different interval on Baba and you start to look at, all right, well, where were we in terms of bottoming out in 19? Go back on a weekly chart. I'll go back 5 years. That's usually going to be my preference. I try not to make a habit of making my platform pull a lot of data in because that will bog it down. But if I'm looking at a weekly time frame, it's 5 years. And all of a sudden, yeah, we're below the 200, but all of a sudden these two Darvis levels start showing up as a zone. So I'd keep an eye on, say, 130 to about 148 in that area. I'm not just saying buy in that area. What I'm saying is if Baba starts to form the type of patterns that you look for in your indicators or on your candles that would be something buyable, then Baba is doing the right thing in the right zone. And those are things that are so important. And then once I see Baba doing that, I don't want Baba doing that by itself. Our trades really should have company. I mean, that's at the heart of what I'm talking about in terms of the indices and the sectors and the ETFs that I'm discussing. If you're looking at Baba to move higher, number one, you don't need to find the single relative outperformer and always hang your trade or even your setups on that. You really want to see other names that are in that same C, which is not a great one right now, but in that same C, a group of trades. You want to see other names like Baba also developing that. And if you've got that, then you're in really good shape, my friend. Okay. So next up is Any thoughts on the S&P, Andres? I love to trade futures. We're going to be day trading them today. I've always got thoughts on the ES. So ES thoughts extend to SPY, SPX, XLF, XLV, XLK, and then all the individual stocks. That's index stocks, index sector stock. So let's go back to the daily here. We've got to start with market structure. Everything is structure. Think of it as the weather, right? If you're going to do something outside, what's the weather looking like? For us, it's sort of cloudy with a chance of sunshine, right? I mean, I'm not ruling out higher highs. I'm not ruling out lower lows, but the trend that preceded the chop was up. So the trend that we have now carries with it some of that. So before I start saying, well, this is bearish neutral, not so fast. It's actually bullish neutral or neutral bullish, however you want to look at it. So until I've got the requisite number of grab candles up in here, until I've got the structure that I need to indicate that this has indeed organized into a downtrend. And by the way, please look at the length of time just through 2021 that this has been moving higher. And think about how often traders have jumped the gun on, oh, this is the breakdown. Oh, breakdown. Yep, breakdown. I've just really, frankly, been wrong. Now, I know the environment is different. You know, back in May, June, we weren't talking about taper. That is very true. The conversation around the Fed has changed, whether it's who's going to keep their job to the Fed trading scandal. I don't know why it's a scandal if this is something we had to presume these guys were doing. But anyway, it is a different environment macroeconomically, pre-taper, etc. So I'm not just going to presume a reversal. Multi-month, almost the entire year, moving higher. And a lot of traders in 2 or 3 candles think, oh, this is the trend that's broken. And that's where we go down the slippery slope of assuming that all it takes to break what is almost a 9-month uptrend is 2 days, 2 sessions. And I've never subscribed to that. So I need to see a certain number of sessions indicate that, yeah, this long-term uptrend is not just broken, but then has also turned into what could be a downtrend. And that's where traders behoove themselves to understand not just ES, but then the pieces within it, right back to ETFs. The pieces within the ETFs, right back to stocks. So whenever you think about ETFs, when I'm talking about ETFs on Wednesday during the webinar, remember that this also relates back to stocks. This is how I trade stock options. This is also how I get clarity on the futures trades that I make. So it works both ways. It works when you're taking it a little bit more granular to stocks, and it works when you move higher to the larger asset class, if you will, in the indices. So I'm not bailing on ES, but then I also have a position we scaled out of last week in XLF, which is the best piece of this, right? My thoughts on ES are, until it's a downtrend, I'm not going to jump the gun on it because that's going to cost me money. It's okay, though, and this is what's really important. You can have a conversation about Raghee, yellow, grab. I'll just hold off on anything in the ES right now. Having the ability to look at your indicators and say, probably a market that I want to hold off on right now, or I want to dial into the ETFs. I want to dial into the stocks and find where relative outperformance is. That's always going to be something that you have the choice to do if you know what that means, what that transition means. And that's where a lot of traders, and for a long time in my career, I used to get burnt because it's the transitions and trends that are always the most painful. Always, except for top pickers, in which case they've been doing that a long time. And this is certainly not going to be exactly what they need to make up for however many tops that were picked along the way. So barring a very low probability, I wouldn't even call it a strategy, transitions are always tough. Don't beat yourself up right now. This is just a transitional market, and it's always going to be tricky. So with that, that's Charts and Coffee. Again, I'll see you guys Wednesday at 8. I'll see you tomorrow for Charts and Coffee, and I'm going to hop into the futures room for some day trading of the open. Have a great one as always. Thank you very much. Smash that like button on the way out. Leave some questions or comments, whatever you'd like. I do check them at the end of the day. So if you're watching this live or recording, I do check them out. So thanks as always. Talk with you soon. Be good to each other.